Hi friends, welcome to Navkar Digital Institute, India's first virtual learning platform for professional coaching. Friends, I believe we understand the importance of RTPs, MTPs and past papers. I mean, they carry a lot of weightage. Actually, they are useful from two perspectives. Number one, it gives you an idea about trend, and specifically when you refer last 5 attempts RTPs and MTPs and past papers, you understand the trend in which the questions are going to come in your exam. And more important, after preparation, when you solve RTP, MTPs and past papers, it boosts your confidence, because RTP, MTP and past papers are the ideal papers, or rather the actual papers which have been either asked in exam or has been released by ICI, that they are something, this is something which is what they are going to ask in your exams. But you know friends, where the problem is, like they have released one of the RTP in May 18. Now when May 20 students are referring those RTPs, the point is, what about the amendments? What about the changes? What about the components which has been modified? You know, in India, a lot of faculties have released lectures of RTP May 18, but they have recorded that at that time when RTP of May 18 actually was issued by ICI. Friends, that's where Navkar, the NDI, is taking an initiative. What we are doing is, respective RTPs and MTPs, we are amending as per the relevant attempt, and now we are in process of releasing the amended RTPs and MTPs. So today, when in June 20, I am recording the RTP, I am obviously recording RTP of May 20, but I am also recording RTP of May 18 as amended for June 20 attempt, or let's say as amended for November 20 attempt. So I hope you understand the importance of amended RTPs and MTPs, and for that you can rely only on one institute, and that is NDI, which is Navkar Digital Institute. Yes friends, we are the only one who is providing amended RTPs and MTPs for your attempt. So stay with us, stay home, stay safe and stay healthy. Thank you and God bless you.
Hello my dear friends. So friends, we are done with discussion on papers of November 2019 and also May 2019. Now we'll look at our ICI past exam paper of November 2018. After that we'll talk about May 2018 also. But first, let's spend some good time on discussion about the paper of November 2018. Are we ready my dear friends? Right. So let's start discussion about November 2018 paper my dear friends, in which we have got some good questions which came in the exam, where there are very conceptual and very good interesting points are there in this particular paper my dear friends. So we'll spend some good time and figure out what kind of questions have come in the exam and how ICI have been trying to test the students' knowledge. Clear friends? Come on, let's begin. One point what I can clearly tell you before I start the paper is that since this paper is of November 2018, you will not find multiple choice questions. Obviously you will not find multiple choice questions. But one point is very clear, there were some good number of questions which have come from nook and corner of the entire syllabus. Because when ICI is framing a question paper, they try to ask questions from different chapters, so that they try to cover the paper in a holistic manner. With that idea, they frame a question paper and ask. Now in this paper, some questions are not discussed at all because they are related to customs, in relation to that chapters which have been removed from syllabus. If you remember, I clearly told you that with effect from November 2019 paper, there were some good number of chapters from customs which have been removed from syllabus. So there is no point about discussing about those questions by wasting your time, by wasting my time. So let's not do that. Let's spend our time very effectively and very perfectly. Are we ready guys? Come on. Let's start discussion about paper of November 2018. Let's begin. And obviously you will not find multiple choice questions, because that time MCQs were not there in syllabus. But of course we all now know the pattern of our paper. Our paper pattern is going to be very simple, where first 30 marks will be for multiple choice question, then only you'll have 70 marks descriptive questions. An interesting point, we know that in first 30 marks MCQs what we have, I repeat one more time, first 30 marks MCQs what we have got. The interesting point which I told you is that you will get 2 case studies wherein each case study is for 10 marks each. So automatically what will happen? 20 marks are done. And then 5 independent questions will be there. 5 independent questions, not as case study, but they are independent questions of 2 marks each. 2 marks each. And this will have a weightage of 10 marks. Totally 30 marks will come from multiple choice questions and 70 marks will come from descriptive question. But this paper of November 2018 does not contain multiple choice questions, because that time the concept of multiple choice questions was not there in our paper pattern. Clear, friends? Come on, let's proceed. Let's start our discussion. Come on. John T. India Limited. Come on, friends. What is the first question? John T. India Limited, a manufacturer of heavy machines, registered at Jaipur, Rajasthan, supplied one machine to Navkar Limited of Udaipur, Rajasthan on 5/12/2018, and supplier is in Rajasthan, receiver also is in Rajasthan. So obviously what will come is CGST and SGST. There is no doubt about it. See now, under an invoice on the same date, using information given below, compute value of machine and also the GST payable in cash for the month of February by John T. India Limited with appropriate working notes. Come on, see the question. Let's see that. Basic price of the machine 28,50,000. That is what we will start with. That's what we'll start with. Then trade discount at 3% of basic price. What we'll do, sir? Trade discount is always reduced. Then next one, secondary packing. One more time I repeat, what packing, sir? Secondary packing in iron sheets. Secondary packing in iron sheets, charges for transportation of machine on the request of buyer. This secondary packing is always what we will add, my dear friends, because of 15(2)(c). 15(2)(c) talks about any incidental expenses or anything charged by supplier from recipient will always be included in the value of supply. So friends, 15(2)(c) clearly says that any incidental expenses or anything charged by supplier from recipient will be included in the value of supply. Then design and engineering charges, this also we will add because of same section 15(2)(c). Because 15(2)(c) clearly says any incidental expenses or anything charged by supplier from recipient will be included in the value of supply. Next line. Tax levied by municipal authority on sale of machine. Sir, this also we will add because of a brilliant section called 15(2)(a). Because 15(2)(a) clearly says all taxes, duties, cess, fees. All taxes, duties, cess, fee charged by supplier from recipient, that will definitely be included in the value of supply. Getting clarity, friends? Speak out, sir. Very good. Come on. Next point. Subsidy received by. Come on, friends. What is that line, sir? Subsidy received by. Subsidy received by the supplier from state government to encourage manufacture of the machine. And let me tell you, this is not included. Why? I'll tell the reason, my dear friends. We have got one brilliant section called section 15(2)(e), which says that any subsidy linked to the price, any subsidy linked to the price will be included in the value of supply, except subsidy from central government or state government. So if subsidy is coming from central government or state government, we'll include in the value of, if subsidy is coming from central government or state government, we will not include that in the value of supply. But if subsidy is coming from other than central government or state government, we will definitely include in the value of supply. But in this particular point, subsidy is coming from state government, so we will not include that in the value of supply. Good. Pre-delivery inspection charges paid to an independent agency. I repeat one more time, paid to what agency, sir? Independent agency. In terms of the agreement for supply, and the amount was paid by Dhanuka Limited. Actually, who was supposed to pay that? It was supposed to be paid by John T Limited, but who actually paid that is Dhanuka Limited. So this is also included in the value of supply because of a brilliant section called 15.2b, my dear friends. Because 15.2b clearly says that supplier's obligation, I repeat one more time, 15.2b clearly says that supplier's obligation. Whose obligation, sir? Supplier's obligation in relation to supply met by recipient will be included in the value of supply. Supplier's obligation in relation to supply met by recipient is included in the value of supply. Then interest amount paid by Dhanuka Limited for delay in what, my dear friends? Payment for machine. This is also included in the value of supply because of one section called 15.2d, my dear friends. But one point keep in mind, something like interest, late fees or penalty, something like what, sir? Interest, late fees or penalty are always treated as inclusive of GST. Come on, my dear friends. Very, very interesting language, sir. They're always treated as what, my dear friends? They're always treated as inclusive of GST. Very, very interesting language. Getting clarity, guys? Good. And this was the story of the outward supplies. And below they also gave what, my dear friends? Inward supply. See that? Come on. Come on, friends. Kindly concentrate and focus. When some discussion is being done, please concentrate. Because the ultimate objective of all these kind of videos, what Shivateja is sharing in association with Navkar Digital Institute, the idea is pretty simple, that we want to make sure that you guys are mastering the subject. And you go to the exam with the utmost level of confidence. That is what we want. Clear, friends? Done. Inward supplies. IGST paid on food items for consumption by employees working in the factory. That is straight away, my dear friends, as you all are aware, it is a block credit, because on food items we can't take credit. However, credit is allowed if it is a statutory obligation for the employer, but nowhere they told it is a statutory obligation. Next line. SGST and CGST 15,000 each paid on electrical transformer used in manufacturing process. This happily we can take input tax credit. No doubt about it. John T India Limited has no input tax credit balance. See that line? John T India Limited has no input tax credit balance. Has no input tax credit balance at the beginning. That means what? There is no opening ITC. All other conditions necessary for availing eligible ITC have been fulfilled. Very good. There are no other transactions of supply during the month of February, and moreover, John T India Limited and Dhanuka Limited are not related persons. That's all. Pretty simple and easy question which came in the exam for about how many marks, my dear friends? This question came in exam for 10 marks. Very, very scoring, guys. So if I start calculating, guys, how do we do this, sir? Come on. First, what is the basic price, my dear friends? If you see very clearly, my basic price is 28,50,000. To this 28,50,000, what all I will add? Come on. First. Come on, friends, what all I will add? Secondary packing I have to add, design charges I have to add. Secondary packing 30,000, design charges 90,000. Secondary packing 30,000, design charges 90,000. Come on, see that. Secondary packing 30,000. Design charges 90,000. Then tax levied by municipal authority 25,000. Tax levied by whom, sir? Municipal authority is 25,000. That also we will add because of 15.2a. Any taxes, duties, cess, fee charged by supplier from recipient will be included in the value of supply. Tax levied by municipal authority. What is that figure, my dear friends? 25,000. The next what? Subsidy received from state government, that will not include. Then pre-delivery inspection charges will include, that is 22,000. Interest amount also will include, but we'll gross up, we'll gross up the figures and then we'll calculate. Pre-delivery inspection charges 22,000, interest amount 12,000. Clear? Come on. See that? Pre-delivery inspection 22,000. And when I talk about interest figure, the interest figure is actually 12,000, but I'll do it as 100 by 118. And the reason I do 100 by 118 because interest figures are always deemed to be inclusive of GST. 22,000 into 100 divided by 118. 118. That's coming to 12,000 into 100 divided by 118. That's coming to 10,169.49. Rounding off, the figure is 10,169. Come on, friends. 10,169. What does the total come to? 28,50,000 plus 30,000 plus 90,000 plus what else was there? 25,000 plus 22,000 plus 10,169. Exactly. Total figure is 30,27,169. 30,27,169. And from this 30,27,169, I'll reduce discount. And what was the figure of discount? Discount figure was 3% on basic price. 3% on 28,50,000. 28,50,000 into 3%, it comes to 85,500. Come on, friends. 85,500, because this is 3% on 28,50,000. So what is the figure, my dear friends? 30,27,169 minus 85,500. That is coming to 29,41,669. That becomes my value of supply. Clear, friends? Go on. So my value of supply will be 29,41,669. On this, when I start calculating my CGST and SGST, what is the figure, friends? 29,41,669 into 9%, that's coming to 2,64,750. 2,64,750 becomes my CGST, and of course SGST also remains same. Correct or not? Exactly. 2,64,750, my dear friends. 2,64,750, and from this I'll reduce my input tax credit. How much I've got CGST, SGST? Come on, going back to the question. I cannot take credit on food items because it's a block credit, but I can take only on the electrical transformers. 15,000, 15,000. That's it. CGST 15,000, SGST 15,000. Come on, friends. 15,000 and 15,000. CGST 15,000, SGST 15,000. So balance answer is 2 lakhs. How much, my dear friends? 2 lakh 64 minus 15. So 2,49,750. 2,49,750. This becomes my net GST payable. So this figure becomes my net GST payable, my dear friends. That's it. This is what is the story of this wonderful problem where they were asking about the concept of net GST liability. Are we clear, friends? Done. That is the story of this wonderful point, my dear friends. Come on, let's proceed. Come on, friends, we are done with first bit. Let's look at the second bit, my dear friends. Come on. Kindly please concentrate. Focus, come on. Second bit, come on. See that? Second bit is an interesting question which came in the exam on the concept of time of supply especially. See that, my dear friends. Chiku Traders is a registered supplier of plastic goods. Very good. On 10th April 2018, Chiku Traders received an order from Nilu Traders for supply of consignment of plastic goods. Chiku Traders gets the consignment ready by 15th April and the invoice for the consignment was issued the next day, my dear friends. Invoice was issued on next day. It was not supposed to be 15th. They made a small printing mistake in the question. It was supposed to be 16th. Because when they told next day, it will obviously be 16th, my dear friends. Clear, sir? Now, Nilu Traders collect consignment from godown of Chiku Traders. On 25th April, they collected the goods and hands over the check towards payment on the same date. The said payment is entered in the books of account of Chiku Traders on 26th April 2018 and the amount is credited in their bank account on 27th April 2018. Determine time of supply of the plastic goods. Friends, first fundamental fact, let me explain you very clearly, my dear friends. The concept of time of supply in relation to goods is dealt by a brilliant section called section 12.2, my dear friends. Which section, sir? 12.2, which says, once upon a time, the answer was date of invoice or date of payment, whichever is earlier. This was the concept once upon a time, but later on, amendment has been done to this particular point where they told that as per notification number 66 by 2017. I repeat one more time, as per notification number 66 by 2017, dated 15th November 2017. Come on, friends, as per notification number 66 by, come on, friends, generally what is the answer, sir? Generally the answer is date of invoice or date of payment, whichever is earlier. But as per notification number 66 by 2017 dated 15th November 2017, they clearly clarified that time of supply will be, straight away they told, date of invoice. And let me tell you very clearly, my dear friends, date of invoice means actual date of invoice or last date when invoices ought to have been issued. Last date when invoices ought to have been issued under section 31. Whichever is earlier. Come on, my dear friends, look at that point. Very interesting, my dear friends. Kindly concentrate and look at that point. So what they told in the law is that section 12 talks about time of supply in case of goods, where they clearly told that time of supply will be date of invoice, date of payment, whichever is earlier. This was the concept once upon a time, but as per notification number 66 by 2017 dated 15th November 2017, they made amendment telling very clearly that time of supply will be date of invoice. And let me tell you very clearly that date of invoice means actual date of invoice or last date when invoice is ought to have been issued under section 31, whichever is earlier. Now an interesting point I'll tell you, listen very carefully, sir. As per section 31, whenever there is a movement of goods. Come on friends, I repeat one more time. Kindly please concentrate, sir. As per section 31, as per which section, sir? As per section 31, whenever there is a movement of goods, invoice must be issued on or before date of removal. Come on, my dear friends, very interesting concept, interesting language. Kindly please concentrate, my dear friends. Section 12 deals with time of supply in case of goods, where once upon a time the answer was date of invoice or date of payment, whichever is earlier. But after notification number 66/2017, dated 15 November 2017, straight away answer is date of invoice. And let me tell you very clearly, date of invoice always means actual date of invoice or last date when invoice is ought to have been issued under section 31, whichever is earlier. And section 31 says whenever there is a movement of goods, invoice must be issued on or before date of removal. Now going back to the discussion, my dear friends, if you see here, when invoice is actually issued 16th of April, when it was supposed to be issued 25th of April. Why? Because movement of goods is there on 25th of April. Removal happened on 25th of April. So therefore, my dear friends, time of supply will be 16th April 2018. That is a wonderful point. I hope we got a clarity on this question, my dear friends. Pretty simple and easy question which came in the exam. But if you want full marks, please make sure that you write all these points very clearly, stating very clearly that once upon a time, time of supply was date of invoice, date of payment, whichever is earlier. However, as per notification number 66/2017, dated 15 November 2017, time of supply will be directly date of invoice. And date of invoice means actual date of invoice or last date when invoice is ought to have been issued under section 31, whichever is earlier. And as per section 31, whenever there is a movement of goods, come on friends, whenever there is a movement of goods, invoice must be issued on or before date of removal. Whenever there is a movement of goods, invoice must be issued on or before date of removal. That's it. Getting full clarity, guys? Speak out. Done. Come on. So first question, A bit done, B bit done. Look at C bit now. Jolly Overseas Limited of Hyderabad has imported a machine from UK. Question is on customs through sea route by a vessel. Details are as follows. Cost of the machine at the factory of exporter 20,000 pounds. Transport charges from factory to port, we'll add that. Handling charges for loading machine in the ship, we'll add that. License fees, that also we'll add. Because they clearly told payable by importer. Payable by what, sir? Importer as a condition of sale. Payable by importer as a condition of sale. An interesting point is that actual freight charges from port of export to port of import are not ascertainable. Friends, whenever we don't know the freight charges, what we always take is, come on friends, 1 second. Just a second. Come on. Actual freight charges from port of export to port of import are not ascertainable. Friends, when we don't know this, what we will straight away take is 20% of FOB. Because there are two cases where we take 20% of FOB. Number one, when freight charges are not ascertainable. Number two, when goods are imported by air. Because when goods are imported by air, actual freight is restricted to 20% of FOB. And friends, let me very clearly tell you, when we take 20% of FOB, then we don't again add this transport charges, handling charges. These two are not included in case where we take 20% of FOB. Clear friends? For the reason being very clear that 20% of FOB, 20% of FOB, what we'll take is basically covering cost of transport, loading, unloading, as well as handling charges. I repeat one more time, my dear friends, 20% of FOB, one more time I repeat, my dear friends, 20% of FOB covers, 20% of FOB covers cost of transport, loading, unloading, handling charges from place of export, I mean to say from factory of the exporter till the time the goods reach India. So friends, if I look at what is the FOB, come on, see now, 20,000 plus 600 plus 500 plus 900, exactly, that becomes my FOB. How much is that? 29,000, 20,000 plus 6 plus 5 plus 9, so it becomes 22,000. That becomes my FOB. Of that 20% means I take the figure as 4,400. Getting clarity, guys? Speak out. Very good, come on. So friends, 20% of 22,000 becomes 4,400, and ultimately the point what you have to understand is that 20% of FOB figure what we are taking, 20% of FOB figure what we are taking is a substitute for cost of transport, loading, unloading and handling charges from factory of the exporter till the place of importation. Actual insurance charges 200, that also will take into account. Then landing charges not ascertainable, nothing will do, because there is nothing called landing charges. Once upon a time there was a concept called landing charges take 1%, but it is not there now. Next, handling charges associated with delivery of imported goods at the place of importation. This we will not include. For the reason being very clear, my dear friends, we will consider only that cost up to the place of importation. But if any cost is incurred at the place of importation, that is not considered. We will consider only that cost, whatever is incurred up to the place of importation, but not at the place of importation. Clear, friends? Come on. I repeat one more time, my dear friends. While computing assessable value, that is CIF, cost up to the place of importation, cost what, sir? Up to the place of importation is included. However, expenditure incurred at the place of importation. Come on, my dear friends, kindly please see that, sir. However, expenditure incurred, one more time I repeat, my dear friends, however, expenditure incurred at the place of importation is not included. Very, very interesting point, my dear friends. Come on, I repeat one more time, sir. While computing assessable value, that is CIF, cost up to the place of importation is included. However, expenditure incurred at the place of importation is not included. So friends, when I start solving the problem, what is cost of machine, sir? Cost of machine is 20,000 pounds. To this, I will not add transport charges because they are covered in 20% story. Handling charges also I will not add because they are also covered in 20%. But license fee separately I have to add. Correct, my dear friends? Come on. Let me add that license fee. License fee 900 pounds. Then insurance 200 pounds. Freight 20% of FOB. And let me write very clearly, my dear friends, to give you clarity, this 20% of FOB is substitute for cost of transport, comma, loading, unloading. This 20% of FOB, one more time I repeat, my dear friends, this 20% of FOB is a substitute for cost of transport, loading, unloading and handling charges. From factory of exporter, till the place of importation. From factory of exporter till the place of what, my dear friends? Importation. Very, very interesting point. Come on, my dear friends. I repeat one more time. This 20% of FOB. One more time I repeat, sir. Kindly please listen. This 20% of FOB is a substitute for cost of transport, loading, unloading and handling charges from factory of the exporter till the place of importation. From factory of the exporter till the place of importation. And FOB figure already we calculated 22,000. So on that 20% is 4,400, my dear friends. And this 4,400 is a substitute for cost of transport, loading, unloading and handling charges from factory of the exporter till the place of importation. 4,400 pounds. Come on, friends. 20,000 plus 900. 20,000 plus 900 plus 200 plus 4,400. This is coming to 25,500 pounds. How much pounds, guys? Come on. 25,500 pounds. 25,500 pounds. And if I go back to the question, my dear friends, in the question, landing charges will not consider. Handling charges, of course, will not take because it is incurred at the place of importation. We will consider only that cost. I clearly told you that we will consider only that cost or expenditure incurred up to the place of importation. We will consider only that cost or expenditure incurred up to the place of importation. Going back. Bill of entry is filed on 21st of January. Entry inward is on 26th of January. Friends, one point keep in mind, we are talking about something called exchange rate. Exchange rate we will always see on the date of filing bill of entry, and moreover we will not see RBI rate, we will see CBIC rate. Sir, if it would have been rate of duty, we would have seen on bill of entry or entry inward, whichever is later. But when we talk about exchange rate we will always see on the date of filing bill of entry, and that too, moreover, we will not see RBI rate, we will look at CBIC rate. What is CBIC rate? 101. So 25,500 what we got into 101 comes to 25,75,500. 25,75,500. So therefore, assessable value is equal to 25,500 pounds. Come on, friends. Assessable value is equal to 25,500 pounds into 101, which comes to 25,75,500. 25,75,500. That becomes my answer. Such a brilliant question, my dear friends. I strongly believe that we got full clarity on these points. Extremely wonderful and very, very interesting points. That's it. That is what is the story of question number 1, my dear friends. Come on, moving forward. Question number 2, sir. See that. PQR Company Limited, a registered supplier in Bengaluru, Karnataka, is a manufacturer of goods. Very good. Company provides following information pertaining to what, my dear friends? GST paid on inputs GST paid on input supplies. GST paid on what, sir? Input supplies during the month of April. So obviously what they will ask you is to, come on, see the question first of all. Compute what, sir? Amount of net input tax credits available for the month of April 2018 with necessary explanation for your conclusion for each item. You may assume that all the necessary conditions necessary for availing input tax credit have been fulfilled. Come on, see now. Let's look at the question. First one. Life insurance premium paid by company life insurance premium paid by company on the life of factory employees as per policy of the company 101%. This is a blocked credit under section 17(5) clause B, because in case of life insurance and health insurance, credit is not allowed. However, if the employer has taken that, as a part of statutory obligation, what obligation, friends? Statutory obligation, then credit will be allowed. Here in the question, they did not tell it is a statutory obligation, but they only told it is being taken as per policy of the company. If it is as per policy of the company, then input tax credit is not allowed, friends. It's a block credit. Then raw material purchased for which invoice is missing, but delivery challan is available. Straight away my answer is no input tax credit. The reason being, my dear friends, we have got one section called section 16(2), which talks about conditions to be satisfied for the purpose of claiming input tax credit. And the first condition is receiver should have tax paying document. Receiver should have what, my dear friends? Tax paying document, and tax paying document is always invoice but not delivery challan. Clear, friends? Next line. Raw material purchased which are used for zero rated outward supply. If it is zero rated outward supply, 100% ITC is allowed, my dear friends. No doubt about it. Then works contract service used for repair of factory building, which is debited to P&L account. Very interesting word. The word used is debited to P&L account. My dear friends, my answer is ITC is allowed. I'll tell the reason why. Because, my dear friends, we have got a point which says that 17(5) clause C. Otherwise, my dear friends, for this point, I can use the word, it is not, this is not blocked under section 17(5) clause C. Sir, 17(5) clause C, there is one point which says that works contract services for construction of immovable property, credit is not allowed. I repeat one more time, works contract services for construction of immovable property, credit is not allowed. And the word construction is defined in the law, which says that construction means any repairs, renovation or alteration or reconstruction to the extent of capitalization. I repeat one more time, my dear friends, what is covered there very clearly is something like this. Construction covers any repairs, renovation, alteration or maintenance to the extent of capitalization to the said immovable property. And here, in this particular point, if you observe, works contract service taken for repair of factory building which is debited to P&L account. When it is debited to P&L account, meaning of that is what? It is not capitalized. When it is not capitalized, it is not called as construction. When it is not called as construction, credit is allowed. Because law told very clearly, credit is not allowed only for works contract service for construction of immovable property. And construction means any repairs, renovation, alteration or reconstruction to the extent of capitalization. To the extent of what, friends? Capitalization to the said immovable property. Clear, friends? Next line. company purchased, I repeat one more time, company purchased capital goods for 4 lakhs and claimed depreciation on 44,800 on full amount of 4,48,000, then what will happen is no input tax credit because of a wonderful section called section 16.3. Because 16.3 always says that if depreciation is claimed, if what is claimed, sir? Depreciation is claimed on the tax component. If depreciation is claimed on tax component, then input tax credit is not allowed. I repeat one more time, friends. If depreciation is claimed on the tax component, then input tax credit is not allowed. Getting clarity, friends? If depreciation is claimed on tax component, then input tax credit is not allowed. Next line. Other information. In the month of September, PQR company availed input tax credit of 2,40,000. Very good. On purchase of what? Raw material, which was directly sent to whom, sir? Directly sent to job worker premises under a challan on 25th September 2017. Said raw material has not been received back from job worker up to 30th April 2018. My answer is no problem. Why? Because as per section 19, my dear friends, as per section 19, whenever inputs are capital goods, I repeat one more time, whenever inputs are capital goods are directly sent to job worker. I repeat one more time, whenever inputs are capital goods are directly sent to job worker, still input tax credit is allowed. However, law gave a time limit for bringing back that inputs are capital goods, where they told that input should come back within 1 year, whereas capital goods should come back within 3 years. I repeat one more time, my dear friends, input should come back within 1 year and capital goods should come back within 3 years. Finally, all the above input services except 3 above have been used in manufacture of taxable goods. Very good. So friends, first one block credit, second one no ITC, third one ITC is allowed, fourth one also ITC is allowed. So technically, my total input tax credit available will be 80,000. That's it. That is the story of this wonderful question, my dear friends. And I'm pretty sure this point makes sense for all of you guys. Clear, my dear friends? Very interesting and important point. Very brilliant question came in exam. And if this kind of question come, it will become very scoring for us and we can actually rock in the exam. Clear? Which paper we are talking? November 2018, my dear friends. Next. B-bit, come on. Mr. Mahendra Sharma, an interior decorator registered at Ahmedabad, provides service to one of its clients, XYZ Company Limited, registered at Pune, Maharashtra. That means it is an interstate supply. Provision of service was completed on 10th August 2018. Very good. Payment was entered in the books on 11th August 2018. Fantastic. With effect from 16th August 2018, applicable GST rate was increased from 5% to 12%. Other words, we are talking about something called change in rate of tax. Change in what, sir? Rate of tax. However, payment for services rendered was created in the bank account on 17th August 2018 and invoice for the same was raised on 23rd August 2018. Mahendra Sharma claimed that he is liable to pay IGST at 5%, but department took a view that he is liable to pay IGST at 12%. Examine the correctness of Mahendra Sharma's contention and determine time of supply and also rate of tax. Next line they asked, would your answer undergo any change in the above case if the payment was credited to the bank account on 14th August instead of 17th August? Clear, friends? First fundamental point which I'll tell you is something like this. Sir, in case of time of supply, for a case of change in rate of tax. In case of time of supply, for change in rate of tax, we have got one brilliant section called section 14. Section what, my dear friends? 14. And obviously only 3 dates are important for us. Number 1, date of completion of service. What is the date of completion of service, my dear friends? We will see that. Second one, date of invoice. Third one, date of payment. Only these 3 dates are relevant for us, my dear friends. And date of completion of service is what? Date of completion of service is 10th August 2018. 10th August 2018. And invoice is on 23rd August 2018. Date of completion of service is 10th August 2018. Come on. Date of completion of service is 10th August 2018. Whereas date of invoice is 23rd August 2018. Clear, my dear friends? Now, when I talk about date of payment, some interesting concept is there here. What is that? Listen. In section 14, there is one special point, that is, in general, date of payment means date when payment is entered in books. Come on, friends. In general, I repeat one more time. In general, date of payment means date when payment is entered in the books, or date when payment is credited in bank. Come on, friends. I repeat one more time. Kindly please listen, my dear friends. Please concentrate. Come on. In general. What general? In general, date of payment always means date when payment is entered in the books, or date when payment is created in bank account, whichever is earlier. Come on, my dear friends. I repeat one more time. Kindly please listen. Please concentrate. Come on, my dear friends. In general, what is the language we are talking? In general, date of payment means date when payment is entered in the books, or date when payment is created in bank, whichever is earlier. And now let me tell the special point. If credit in bank account, if credit in what account, sir? Bank account. If credit in bank account is after 4 working days, if credit in bank account is after 4 working days from change in rate of tax, then date of payment will be date when payment is credited in bank account. Very, very interesting language, my dear friends. Kindly please concentrate and focus. Sir, generally what is date of payment is that, generally date of payment means date when payment is entered in the books, or date when payment is debited in the bank. I mean to say date when payment is credited in bank account, whichever is earlier. But one special point, what is there in section 14 is something like this. One special point in section 14 is, if the credit in bank account, if what, sir? If the credit in bank account is after, if the credit in bank account is after 4 working days, after 4 working days from change in rate of tax, then date of payment will be date when payment is created in bank account. Sir, going back to the question, when is the change in rate of tax? Change in rate of tax is on 16th August 2018. And when is the credit to bank account? Credit to bank account is on 17th August 2018. That means this is not after 4 working days. When it is not after 4 working days, special point will not apply, and we will take the date of payment as date when payment is entered in the books or date when payment is credited to bank, whichever is earlier. And when we entered in books, 11th August we entered, 17th August credited. So straight away my date of payment will become 11th August. Date of payment will become 11th August 2018. Clear, friends? Now interesting point is services before change in rate, payment also is before change in rate, whereas invoice is after change in rate. In this particular case, my dear friends, time of supply will be date of payment, which is equal to 11th August 2018. Because law clearly told that section 14 clearly says if service is before change in rate, service is when, sir? Before change in rate. Service is before change in rate, payment also before change in rate, but invoice is after change in rate. Then time of supply will be date of payment. This is what is given by section 14, my dear friends, which talks about time of supply in case of change in rate of tax. That's it. And below they asked one more point in the question, would your answer undergo a change if the payment was credited to bank on 14th August? Still my answer remains same, because change will come only when credit to the bank is after 4 working days. Because generally date of payment always means date when payment is entered in the books, date when payment is credited to the bank, whichever is earlier. But special point what they told is that if credit in bank account is after 4 working days from change in rate of tax, I repeat one more time, if the credit in bank account, if what's the credit in bank account is after 4 working days from change in rate of tax, then we'll take date of payment as credit in bank account. That special point is there only in section 14. That's it. That is the story of this wonderful question, my dear friends. Makes sense, right? Brilliant, come on. CBIT. I'm sure we are getting full clarity, guys. Very good. Hirawal and Sons, registered in Karnataka, has opted to avail benefit of composition scheme. Fantastic. It has furnished following details for the tax period ended on 30th June 2018. Taxable turnover of goods is 15 lakhs. Exempt turnover is 17 lakhs. Total turnover is 32 lakhs. Using above information, calculate total GST to be paid by the firm for the tax period in independent cases. 1. He is a manufacturer. If he is a manufacturer, my dear friends, he will pay tax at the rate of 0.5 plus 0.5 on 32 lakhs. And if he is a trader, he will pay tax at the rate of 0.5% plus 0.5%. 0.5% plus 0.5% on 15 lakhs, because trader will pay tax only at the rate of 0.5 plus 0.5 on taxable turnover, whereas manufacturer will pay tax at the rate of 0.5 plus 0.5 on total turnover. Straight simple question, straightforward question given by under section 10 composition scheme, which clearly says that manufacturer will pay tax at the rate of 0.5 plus 0.5 on total turnover, whereas trader will pay tax at the rate of 0.5 plus 0.5 on taxable turnover. That's it. Very simple and easy question. Then debit, my dear friends. Sir, debit is related to concept of warehousing, my dear friends. So I will not talk about this because warehousing topic has been removed from your custom syllabus. Clear with this? Done. Next. Come on, friends. I'm sure we are getting full clarity, guys. Done. Look at the EBIT now. With regard to powers of customs officers, interesting question. With regard to powers of customs officer to draw samples under section 144, indicate, come on, what is that they want us to indicate? Purpose for which samples can be drawn. So let me very clearly tell you, my dear friends. Let me tell you very clearly, sir. samples can be drawn for the purpose of examination. Samples can be drawn for the purpose of what, sir? Examination or testing or for ascertaining value. Come on, friends. Very interesting language. Samples can be drawn for what purpose, my dear friends? Samples can be drawn for the purpose of examination. Samples can be drawn for the purpose of what, my dear friends? Examination or testing or for ascertaining value. That's it. Simple point. Second, when can the samples be drawn? Generally, when the goods are passing through customs clearance, they can draw the samples, my dear friends. So to answer that point, my dear friends, when can the samples be drawn? Listen, samples can be drawn. Samples can be drawn on the entry. Samples can be drawn on what, my dear friends? On the entry or clearance. Samples can be drawn on the entry or clearance of any goods. Samples can be drawn on what, my dear friends? On the entry or clearance of any goods, or at any time, while goods are being passed, through customs area. While goods are being passed through what area, my dear friends? Customs area. So when the goods are being passing through customs area, at that time samples can be drawn. So samples can be drawn on the entry or clearance. It can be drawn on the entry or clearance of any goods, or at any time while the goods are being passed through what area, sir? Customs area. That's it. Come on, friends, speak out. Samples can be drawn. Samples can be drawn on the entry or clearance of any goods, or at any time while the goods are being passed through customs area. Next, anything else they asked? Last bit they asked is provisions for disposal of sample after purpose is over. So generally what they do is, after purpose is over, they will return the sample back to the owner if it's possible. However, if owner fails to take delivery within 3 months, then the sample will be disposed of. Come on, friends. Let me write the answer for that. Generally, such sample is returned after purpose is over. Generally, sample is returned when, my dear friends? After purpose is over. Getting clarity, my dear friends? Speak out. However, if owner fails to take delivery, within 3 months, from date on which sample was taken, within 3 months from the date on which sample was what, my dear friends? Taken, then it may be disposed, my dear friends. That means they'll sell that samples. As principal commissioner may be disposed on directions of principal commissioner. On directions of principal commissioner or commissioner. Exactly. Very, very interesting language, friends. Like this, sometimes straightforward theory questions also can come in the exam. So friends, what will they do after purpose is over, my dear friends? Given sample, generally what they'll do with that, such sample is returned to the owner after purpose is over. However, if owner fails to take delivery within 3 months from the date on which sample was taken, then it may be disposed. Disposed means what? Sold on the directions of principal commissioner or commissioner. That's it. Very, very interesting point. That is the story of question number 2, my dear friends. I hope we got full clarity on these points. Done. Next. Come on, friends. We are done with second question. Now let's start discussion about question number 3, my dear friends. Come on, look at that. Pari Limited of Jodhpur, Rajasthan is a registered manufacturer of cosmetic products. Very good. Pari Limited has furnished the following details for the month of April 2018. Wonderful. Receipts, details of sales. Sales in Rajasthan. For sales in Rajasthan, it is called as intrastate, on which we will pay CGST and SGST. Next, sales in state other than Rajasthan, this is called interstate supplies, on which we have to pay IGST, my dear friends. Export under bond is regarded as zero rated supply, and once the supply is a zero rated supply, GST will not apply. Then raw materials purchased from registered supplier located in Rajasthan, on this definitely you would have paid CGST and SGST, which you can take it as input tax credit. Next slide. Purchased from unregistered supplier located in Rajasthan. Sir, when you purchased only from unregistered supplier, I repeat one more time, when you purchased only from unregistered supplier, they will not charge GST. So on this, my dear friends, no GST, obviously no input tax credit. Then purchased from Punjab from registered supplier, on this you will get credit of IGST, my dear friends. Exactly. Then integrated tax paid on import from USA, this also will take IGST credit, obviously. Then consumables purchased from registered supplier located in Rajasthan, including high-speed diesel, excise and VAT paid worth 31,000 for running machine in the factory. So from this 156, I'll reduce 31 to 50. Balance only I'll take input tax credit, because we will not take credit on high-speed diesel, because we all know that there are 5 petroleum products which have been temporarily kept outside GST. What are those 5, sir? Petroleum crude, high-speed diesel, motor spirit, natural gas and aviation turbine fuel. Then monthly rent for the factory building to owner in Rajasthan, this also will claim input tax credit of the CGST and SGST part. Then salary paid to employee on rolls. On this, my dear friends, straight away I'll use the word no treatment. Why no treatment? I have a reason for that. Because whenever you tell no treatment, you should give a reason for that. What is the reason, friends? Let me tell you. Section 7.2a, read with Schedule 3, talks about an interesting concept called transactions which are neither regarded as supply of goods, transactions which are neither regarded as supply of goods nor regarded as supply of service. In that we have one beautiful point which talks about service by employee to employer. Service by what, sir? Employee to employer in the course of employment. Service by employee to employer in the course of employment. Exactly. Then premium paid on life insurance policies taken for specified employees. And life insurance policies have been taken by Pari Limited to fulfill a statutory obligation. Fantastic point. So let me tell you, generally life insurance, health insurance is a block credit under section 17(5) clause B. But if it is taken to fulfill a statutory obligation, to fulfill what obligation, friends? Statutory obligation, definitely what will happen is ITC is allowed. Getting clarity, friends? Come on, speak out. I repeat one more time, sir. In case of life insurance and health insurance, generally input tax credit is not allowed because it is a block credit under section 17(5) clause B. However, if it is taken to fulfill a statutory obligation of the employer, then definitely input tax credit is allowed. Then all the above amounts are exclusive of all kinds of taxes. whenever applicable. However, applicable taxes have also been paid by Pari Limited, and the balance of ITC is CGST 20,000, SGST 15,000, IGST 15,000. This is basically like my opening input tax credit. Done. Assume CGST, SGST, IGST rates to be 9, 9, 18. Assume all necessary conditions to avail eligible input tax credit have been complied with by Pari Limited wherever applicable. Compute eligible ITC and net GST payable. Very, very simple and easy question. But you need to properly do it, systematically do it. Step by step, if you calculate, you will get your answer. So when I want to calculate first my input tax credit, my dear friends, first of all, what are the columns I'll take? CGST, SGST, IGST. Please tell me guys, first of all, what is my opening ITC, sir? 20,000, 15,000, last one is also 15,000, 20,000, 15,000, 15,000. To this, we'll also add current month ITC. Come on guys, what is the current month ITC we got? Purchase from registered supplier located in Rajasthan, 1,06,000. So on 1,06,000, we will calculate 1 lakh, how much is it? 1,06,250. Yes. 1,06,250 into 9%. That is coming to 9562.5. Purchases within the state. Come on. Current month ITC. Purchase within state. 9562.5. This is also 9562.5. I just will put a dash, then next one, purchase outside state. Outside state, what is the figure? Of course, my dear friends, this 37,000 will ignore because that is purchased from unregistered supplier. So when you buy from unregistered supplier, there is no question of GST at all. Then purchase from Punjab from registered supplier 1 lakh, on which we'll end up paying IGST, which is coming to 18%. Clear friends? Come on. Purchase outside the state 1 lakh 18% means it comes to 18,000. After that, we also had IGST paid on import from USA. IGST paid on import from USA. Come on, 22,732. Let's take that figure. IGST on imports 22,732. Then what else we have? Consumables from 156 to 250, my dear friends. Come on. Consumables from 156 to 250. From 156 250. I'll reduce 31,250 because that is towards high speed diesel. What is the balance? 1,25,000. On this 9%, it comes to 11,250. So consumables, I'll take the figure as 11,250 and 11,250. Clear friends? What else? Come on. Salary, no treatment. Monthly rent I have to take 1 lakh. Life insurance I have to take 2 lakhs. Exactly. Monthly rent is how much, my dear friends? 1 lakh. 1 lakh into what percent? 9%. Come on. On monthly rent, my dear friends. Come on, my dear friends. Monthly rent. It is 1 lakh into 9%. So it comes to 9,000. 9,000. And life insurance is 2 lakhs. 2 lakhs into 9% is 18,000. 18,000. That's it. This is the story of my input tax credit. Clear? What are the figures I have? Come on. 20,000, plus 9562.5 plus 11,250 plus 9,000 plus 18,000. Total is coming to 67,812.5. 67,812.5. Let me tell you an interesting point here. If this is 67,812.5, this will be 62,812.5 because opening is 5,000 less. Then IGST figure is 15,000 plus 18,000 plus 22. What was that? 22,732. The figure is 55,732, my dear friends. Come on. So my figure of IGST comes to 55,732. That's it. With this, I'm done with calculation for my input tax credit. So when I start calculating my output tax, first, sales within the state. How much is sales within the state? Let me go back and see the question. 8,75,000. Now I'll calculate 8,75,000 into 9%. That's coming to 78,750. For sales within the state, it is 78,750 is CGST part, SGST part also 78,750. Exactly. Then sales outside state. What is the figure, my dear friends? 3,75,000 and 3,75,000 into directly 18% because it's outside the state. That figure is coming to 67,500, guys. Come on. And export under bond, no GST at all. Sales outside the state, IGST is 67,500. Friends, only thing what we require when this kind of questions come on input tax credit in the exam is that you have to patiently read the question without missing any point. And if you do that, definitely you will get some perfect answer in the exam and some amazing scores will come. Export under bond. What will happen, my dear friends? Export under bond is called zero rated supply. And when it is zero rated supply, GST only will not come. So what is the figure, my dear friends, then? 78,750, 78,750, 67,500. From this, I will reduce input tax credit. First, I will take IGST figure 55,732. CGST figure 67,812.5. SGST figure 62,812.5. So therefore, if you look at the story, my dear friends, my net GST liability, how much? 78,750, 78,750 minus 67,812.5. That figure is coming to 10,937.5, my dear friends. Getting clarity, sir? So my net GST liability is 10,937.5. And if this is 10,937.5, this becomes 15,937.5 because input tax credit is 5,000 less. Last one, 67,500 minus 55,732. That comes to 11,768. 11,768. That's it. This is what is the interesting question which came in the exam. We properly do it, very scoring, my dear friends. These kind of questions we should not effort to lose marks at all because they are very scoring and very fantastic, on which we can't afford to lose even a single mark on that. Clear, friends? Done. Then next point. So friends, we are done with third question A bit now. Let's look at the third question B bit now. Come on. See that, my dear friends. On 25th August 2017, Agarwal and Agarwal Limited, registered supplier of textile products located in Bengaluru, Karnataka, purchased one machine for 12,39,000 including IGST from one supplier of Maharashtra who issued invoice on same date. Agarwal Limited put the machine to use on same date and also availed input tax credit for the eligible amount. And Agarwal Limited sold this machine. What they have done, sir? Sold this machine after using the machine in the process of manufacture of taxable goods. For what value they sold, sir? 7,50,000. So let me tell you, whenever a machine on which we have taken input tax credit is sold like this, we have got one brilliant section called section 18(6). Come on. During the purchase as well as sale, IGST rate is 18%. Is Agarwal and Agarwal Limited required to pay GST? If yes, calculate the amount of tax payable under GST law at the time of sale of machine. Wonderful. Also briefly state the relevant statutory provisions. Wonderful, sir. So let me tell you very clearly, my dear friends, an interesting point. As per section 18(6), supply of capital goods on which input tax credit is claimed. Supply of capital goods on which input tax credit is claimed. In other words, as per section 86, if any person supplies any capital good on which ITC is claimed. Come on, friends. As per section 18(6), if any person supplies any capital good on which ITC is claimed, then he must pay higher of following two. Higher of following two. What is the following two? Number one, ITC availed minus 5% per quarter or part thereof. Number two, tax on transaction value. Tax on what value, my dear friends? Transaction value. So friends, if you observe carefully, when did we buy, my dear friends? We purchased on 25th August 2017. And when did we sell, my dear friends? Come on, see that. They sold on 20th August 2018. So 25th August 2017. 25th August 2017 is when we purchased 25th August 2017 and we sold on 20th August 2018. How many quarters will come, my dear friends? August 17 means August, September will become one quarter. In 17 we'll have one quarter, and again October, November, December one more quarter, and in 18 Jan, Feb, March one quarter, April, May, June one quarter, July, August, September one more quarter. So totally you will get 1, 2, 3, 4, 5 quarters are done. Correct, my dear friends? And what is the ITC avail? 12,39,000 is including IGST. So I'll calculate the figure as 12,39,000 into 18 divided by 118. It comes to 1,89,000. How much, my dear friends? 1,89,000. Come on. So if I start working out the problem, my dear friends, my first number will be 1,89,000 minus 5% per quarter. For how many quarters, friends? 5 quarters, which is equal to 25% gone. So what will be left is 75% will be left. That will be 141,750. And how I told 25% gone because 5% per quarter for 5 quarters, 25% is gone. 141,750. Number 2, tax on transaction value. Come on, friends, tell me what is the transaction value? We sold it for what price, my dear friends? Come on. Please look at that. We sold it for 7,50,000. So 7,50,000. 7,50,000 into 18%. That comes to 1,35,000. So tax on transaction value is 7,50,000. 7,50,000 into 18%, which comes to 1,35,000. Therefore, amount payable is equal to 1,41,750. So friends, the final answer is 1,41,750. Very interesting question, my dear friends. Question is based on section 18(6), which talks about the concept of supply of capital goods on which input tax credit is claimed, where law clearly told that whatever ITC you claimed minus 5% per quarter or part thereof, or number 2, tax on transaction value. These two, whichever is higher. That's it. Clear with this point, everybody? Done. Moving forward. Question number 3, my dear friends. 3, see bit. Settlement commission. Done. I'll not talk anything at all, because there was a chapter called settlement commission in customs relevant for your syllabus, but that chapter has been removed from your syllabus. It's no more there as a part of your customs syllabus. So in customs, there were chapters like advance ruling, appeals and revision, penalties, settlement commission, warehousing. Good number of chapters have been removed from your syllabus to make your life more simple and easy. Clear? Done. That is the end of story for question number 3, my dear friends. Now friends, let's look at question number 4, sir. Happy Limited, located at Alwar, Rajasthan, exclusively manufactures and sells the product Shine and Shine, very good, which is exempt from GST. Happy Limited sells Shine and Shine only within Rajasthan, and turnover of Happy Limited in the previous year was 60 lakhs, very good. And what Happy Limited has done now, Happy Limited purchased an additional machinery for manufacturing Shine and Shine on 1st April 2018. Invoice for supply of machinery also was issued on 1st April 2018, very good. Purchase price was 25 lakhs, exclusive of CGST and SGST. So friends, if you see the question very clearly, what is happening here? There is somebody called Happy Limited who are in Rajasthan, and they're exclusively dealing with a product called Shine and Shine, which is purely exempt. Done. And they purchased one additional machinery for manufacturing Shine and Shine on 1st April. Invoice also received on same date. Purchase price is 25 lakhs, exclusive of CGST and SGST. Then, on 1st December 2018, exemption available on the product was withdrawn by central government. Crazy point. And CGST was imposed thereon. Turnover of Happy as on 30th September was, what my dear friends, 45 lakhs. Very interesting point. Clear, my dear friends? Then, see next line. Examine the issue and provide the answers with supporting what note? Explanatory notes. What note, my dear friends? Explanatory note for each of the following. Number 1, does Happy Limited have to register? So one point, let me very clearly tell you that as per section 24, which section? Section 24, wait a second, section 23, my dear friends, first of all. As per section 23 talks about persons not liable for registration. In that one point is there which says that any person engaged exclusively in supply of goods, any person engaged exclusively in supply of goods which are exempt, any person exclusively engaged in supply of goods or service also for that matter. But one point is that any person engaged exclusively in exempt supplies, any person engaged exclusively in exempt supply, for him registration is not required. I repeat one more time, my dear friends. For any person engaged exclusively in exempt supplies, registration is not required. But if you observe very clearly, if you observe very clearly, on 1st of December, exemption is gone. So that means what? Up to 30th November, registration is not required. Up to 30th November, registration is not required. But with effect from 1st of December, since exemption is withdrawn, he is liable to be registered and he has to apply for registration within 30 days from 1st of December. Because per section 25, any person liable to be registered, must apply for registration within 30 days. Come on friends, I repeat one more time. Any person liable to be registered must apply for registration within 30 days, my dear friends. Done. Second, can Happy Limited take credit of tax paid on machinery purchased? If yes, what is the amount of input tax credit? Sir, my answer is no, my dear friends. Because we have got one section called 18(1)(a), which talks about any person who applies for new registration within 30 days, he can claim input tax credit on the stock. Moreover, what he will claim is only ITC on inputs held in stock, inputs contained in semi-finished goods, inputs contained in finished goods in stock. But he can't take input tax credit on capital goods. In fact, one special point is there in section 18(1)(b), which says that input tax credit is allowed even on capital goods. And 18(1)(d) will apply when exempted supply becomes taxable supply by a registered person. That means 18(1)(d) will come into picture. I repeat one more time, 18(1)(d) will come into picture when a registered person is engaged in exempt supply, and that exempt supply became taxable supply. Come on friends, I repeat one more time, 18(1)(d) will come into picture when a registered person is engaged in exempt supply and that exempt supply became taxable supply. But in our example, our Happy is not a registered person, he is an unregistered person. So for him, 18(1)(d) will not apply, 18(1)(a) will apply. And as per section 18(1)(a), you cannot take credit on capital goods. You can take credit only on the stock of inputs. That too, inputs contained in stock, inputs contained in semi-finished or finished goods in stock. That's it. Done. Next bit. Very, very interesting question that was highly promising. Next. Gift trader obtained permission for provisional assessment and supplied 3 consignments of furniture on 28th April. They have gone for provisional assessment, and let me tell you friends, the concept of provisional assessment is dealt by section 60, my dear friends. And tomorrow when final assessment is done, I repeat one more time, when first provisional assessment is done, subsequently they will also do something called final assessment. And obviously between provisional and final, generally difference will be there. And if some amount is payable, we have to pay that amount along with interest of 18% per annum. But if some amount is refundable, then we have to apply for refund. And they will give the refund within 60 days. If they don't give refund within 60 days, interest will start from 61st day, my dear friends. Clear? Done. See now. Tax payment on provisional basis was paid in respect of all 3 consignments on 20th of May. Very good. Consequent to final order by Assistant Commissioner on 21st of June, a tax of 120 and 150 became refundable on first and third consignment, whereas tax of 120 became due. Due means what? We have to pay. Gift trader applied for refund of first and third consignment on 12th July and pays the tax due on second consignment on same day. Very good. Tax was actually refunded to it on 8th of September. Generally they will give within 60 days. If they don't give within 60 days, interest will start from 61st day, my dear friends. Clear? Whereas third consignment, when they paid, sir? 18th September 2018. Clear? Now, customers of Dilip traders who purchase the consignments have not taken input tax credits. Fine. So what? Still you have to pay interest. Determine interest payable and receivable. Very interesting point. Come on, friends. First, let me look at first consignment, my dear friends. First consignment, what is the story? First consignment amount is due. Sorry, first consignment amount is refundable, right? I believe first and third is refundable, second is amount due. Let's check that once, come on. First and third, it's refundable, second is amount due. Come on, first consignment amount is refundable. Correct, right? Come on. First consignment amount is refundable, wherein refund is equal to how much, sir? First consignment 1,20,000. 1,20,000 is refundable. And if you observe carefully, when did we apply for refund? We applied on 12th July and we got on 8th September. 1,20,000. Come on. 1,20,000. And this is applied on 12th July and received on 8th September. So when I say 12th July, from 12th July, I'll calculate something called 60 days. 60 days is how much? 12th July means, July, how many days are there more? July we have totally more about 12 days gone. So we have more 19 days in July. 19 days in July plus 31 days in August. So it comes to 50 days plus 10 days in September. So it comes to 10th of September. Why? Because if refund is given within 60 days from application, if refund is given within 60 days from application, no interest at all. The question of interest only will not arise. Getting clarity, friends? So I repeat one more time. If refund is given within 60 days from application, no interest at all. Interest will not be granted. Friends, getting clarity, everybody? Exactly, come on. This is a story of first consignment, guys. Then third consignment. Then finally I'll talk about second consignment also. Third consignment also amount is refundable. And what is the refund amount for that? Refund amount was 1,50,000. And if you observe carefully, we applied on same date only, 12th July. And received on, which date was that? Received on 18th September, my dear friends. Which date, sir? 18th of September. We applied on 12th July and we got on 18th September. Come on, see now. And we all know the fundamental fact that whenever refund is given within 60 days, interest will not apply. And if they don't give refund within 60 days, then only interest will apply. And that too, moreover, interest will start from 61st day, my dear friends. Therefore, interest is equal to 1,50,000, and of course interest is only 6% per annum into 11th September to 18th September, which is nothing but 8 days, divided by 365. Getting clarity, friends? Come on. 1,50,000 into 6% into 8 divided by 365. That is coming to 197.26. So by rounding off, the answer is straight away 196. Getting clarity, guys? I mean to say 197, right? 197.26. So straight away my answer is 197 by rounding off. That's all. I hope we are getting full clarity, guys, because whenever amount is refundable, we have to apply for refund and they'll grant the refund within 60 days. If they don't give within 60 days, interest will start from 61st day, my dear friends. Clear? Done. Then last point, second consignment. In respect of second consignment, amount is due, my dear friends. And what is the amount to due, sir? The amount to due is 1,20,000. And you have to observe that for this 1,20,000, interest will start from 21st May itself, because interest will start from when the amount was due till when the amount is paid. We will calculate till 12th of July. Clear, friends? Exactly. Due amount is 1,20,000. On this, interest rate 18% per annum. 18%. When we should pay them, 18%. When they will pay us, it's only 6%. And that too, when they will pay to us, we have to apply. And they'll give within 60 days. If they don't give within 60 days, interest will start from 61st day. See now, interest at 18% per annum would be payable from 21st May to 12th July. 21st day to 12th July means 21st May means May will have totally 31 days, right? So 11 days in May, 30 days in June, 12 days in July. Clear, friends? 30 plus 12 is 42, 42 plus 11 is 53. So therefore, interest will be 1,20,000 into 18% into 53 divided by 365. 1,20,000 into 18% into 53 divided by 365. That figure is coming to 3136.43. So rounding off to 3136. Getting clarity, friends? Come on. So what is my answer, my dear friends? My answer works out to 3136. That's all. But it is simple and scoring question. If this kind of question comes, we should feel more happy and lucky, because it's straightforward, where definitely sure short marks will come in the exam. Then next point. C bit, come on. Rule 112 of CGST rules lays down that appellant shall not be allowed to produce before appellate authority or tribunal any evidence, whether oral or documentary, other than evidence produced by him during the course of proceedings before what, my dear friends? Adjudicating authority, or as the case may be, appellate authority. What are the exceptional circumstances specified in the rule where production of additional evidence will be allowed? Clear, my dear friends? Now, one point which I can tell you very clearly is that generally appellate authority, appellate tribunal will not allow any additional evidence. But there are some cases where additional evidence is allowed. Example, something like this. Number one, where adjudicating authority or appellate authority has refused to admit the evidence. They did not take some evidence. So what I'll do, I'll request a higher authority, please take this evidence. Second, one more case where appellant was prevented from sufficient cause for producing that evidence. Clear, my dear friends? Speak out. Exactly. Then one more point, adjudicating authority or appellate authority, they pass the order without giving proper opportunity of being heard. So friends, what are 3 points I told now? Number one, where adjudicating authority or appellate authority has refused to accept the evidence. Number two, appellate authority, adjudicating authority, they passed evidence without giving, they passed order, I mean to say, appellate authority or adjudicating authority, they passed order without giving proper opportunity of being heard. Or there could be a case where appellant was prevented by sufficient cause from not producing appeal. There was some reason because of which he could not produce that evidence. Clear, friends? Getting clarity, guys? Come on. What is the point I just told you? In simple language, the points what I told you is that, number one, adjudicating authority or appellate authority passed order without giving proper without giving proper opportunity of being heard. I repeat one more time, friends. Adjudicating authority or appellate authority, they pass the order without giving proper opportunity of being heard. Next point. Adjudicating authority or appellate authority refused to accept evidence which should have been accepted. Come on, my dear friends. Adjudicating authority or appellate authority refused to accept some evidence which should have been accepted. Then appellant means somebody who filed the appeal. Appellant was prevented by sufficient cause from producing such evidence. Appellant was prevented by sufficient cause from producing such evidence earlier. So earlier he could not produce that evidence, my dear friends. Clear, my dear friends? Speak out, sir. Done. What else they asked? One more point they also asked in the question. One more point they asked in the question is that, can appellate authority or tribunal direct production of any document or examination of any witness? 100% they can do this, my dear friends. They always have got power to direct production of any document or examination of any witness. Done. Next bit. Pile company, D-bit, come on, see that question. Pile company, a unit located in what, my dear friends? Agri export zone, has made an export of $30 lakh per annum on an average during last 3 years. During last 3 years, it wants to export certain goods for export promotion on free of cost basis, which are worth 25 lakhs. US dollar is 50 rupees. Whether Pile can export promotion goods on free of cost basis. Sir, one line I'll tell you is that when they are doing 30 lakhs per annum, I mean to say $30 lakhs per annum, we look at something called to give that star rating, otherwise to call it as star export house. We look at last 4 years performance, current year plus last 3 years. It is $30 lakhs per annum into 4 years. How much? $120 lakh. When it is $120 lakh, my dear friends, it is more than 100 million. Correct, my dear friends? When it is more than, come on, my dear friends, 120 lakhs into what, sir? US dollar 30 lakhs, right? Come on, US dollar 30 lakhs means 30 lakhs into 4 years. 30 lakhs into 4 years, which comes to $120 lakhs. When it is $120 lakh, my dear friends, we will definitely call it as 1-star export house. What export house? 1-star export house. When it is 1-star export house, my dear friends, then they can definitely export on free of cost basis. And what they can export on free of cost basis is something like this. Listen, what they can export on free of cost basis is 1 crore or 2%. I repeat one more time, 1 crore or 2% of average, which comes to 1 crore or 2% of 1500 lakhs. However, 1500 lakhs because $30 lakhs into 50 rupees per dollar, which comes to 1500 lakhs. These two, whichever is lower, and 1500 lakhs into 2%, 1500 lakhs into 2%, which comes to how much, my dear friends? 30 lakhs. So they can do 1 crore or 30 lakhs, whichever is lower, that comes to 30 lakhs. And what they want to do is only 25 lakhs. So can they do that on free of cost basis? 100% they can do that on free of cost basis. My dear friends, let me repeat one more time. In the question they told it wants to export certain goods for export promotion on free of cost basis. And as per law, we call it star export house when it is $120 lakh, we'll call it as 1-star export house. And if it is export house, then definitely they'll give a benefit of 1 crore or 2% of average. And what is the average, my dear friends? Average is 30 lakhs per annum. 30 lakh per annum means 30 lakh per annum into 50 rupees per dollar comes to 1500 lakhs. So 2% of 1500 lakhs is 30 lakhs. 1 crore, 30 lakhs, whichever is lower. So answer becomes 25, answer becomes 30 lakhs. So happily they can do free of cost basis 25 lakhs, no problem at all. Clear, friends? Done. Friends, to clarify you more further, my dear friends, the reason why we call 1-star export house because we will see the average performance during last 4 years. When I say last 4 years, current year plus last 3 years. And what we look at is when it is more than 3 million, we will call it as 1-star export house, 25 million, 2-star export house, 100 million, 3-star export house, 500 million, 4-star, 2000 million, we will call it as 5-star. And here it is a case where it is $120 lakh, so it's nothing but $12 million. $12 million. So definitely we'll call it as what, my dear friends? 1-star export house. Because the category is 3, 25, 100, 500 and 2000. To call it as 1-star, 2-star, 3-star, 4-star and 5-star. Clear, friends? That's it. That is what the story of this wonderful problem, friends. Let's look at question number 5, my dear friends. Come on, see that question. Mr. Sanjay of New Delhi made a request for motor cab to super ride, that is something like Ola or Uber, for traveling from New Delhi to Gurgaon, Haryana. After Mr. Sanjay pays the cab charges using his debit card, he gets the details of the driver, Mr. Joravar Singh, and the cab registration number, obviously. Super Ride is a mobile application owned and managed by DT Limited located in India. Application Super Ride facilitate a potential customer to connect with person providing cab service under the brand name of Super Ride. It's the same like Ola and Uber. Next point. DT Limited claims that cab service is provided by Joravar Singh and hence he is liable to pay GST under GST laws. With reference to IGST law, determine who is liable to pay GST. Friends, first of all, for this particular point, let me tell you, when I talk about IGST Act, we have got one section called Section 5.5. In CGST Act, it is Section 9.5, which says that in case of certain notified services provided through e-commerce operator, in case of certain notified services provided through e-commerce operator is liable to pay GST. And in that, first to foremost point talks about service of transportation of passenger by way of radio taxi, motor cab, maxi cab and motorcycle. So in this case, who is liable to pay GST is nothing but DT Limited, obviously. And next line, would your answer be different if DT Limited is in New York? Sir, one line what they told is that if e-commerce operator is located outside India, then their representative in India would be liable. One point very clearly they told is that if e-commerce operator does not have physical presence in India, I repeat one more time, if e-commerce operator does not have physical presence in India, then the representative in India would be liable to pay GST. And if there is no such representative, they must appoint a representative and make him liable. But they can't escape the tax. Clear, guys? Good. B bit, come on. Mr. Anant Kumar Gupta self-assessed his tax liability as 90,000 for the month of April, but failed to make the payment. Crazy boy. Subsequently, department initiated penal proceedings against Anant Kumar Gupta for recovery of penalty under section 73 for failure of GST and issued a show cause notice on 10th August 2018, which was received on 14th August. Anant Kumar Gupta deposited the tax along with interest on 25th August and informed the department on same day. Department is contending that he is liable to pay the penalty. of 45,000, 50% of 90,000. Examine correctness of stand taken by department. First of all, my dear friends, as per section 73, when we talk about section 73, one point what they told is that if self-assessed tax is not paid, if self-assessed tax is not paid within 30 days from due date, then penalty would apply, my dear friends. Definitely penalty would apply, but one point you have to understand is penalty is always 10% of tax or 10,000, whichever is higher. In our case, what is the tax involved, my dear friends? The tax involved is 90,000, 90,000, 10% is 9,000. So this becomes 9,000 or 10,000, whichever is higher. So answer becomes 10,000. So the point is that levying penalty is correct, but department wants to levy 45,000. That is not correct. Levying penalty is correct, but department wants to levy 45,000. That is not correct, my dear friends. Getting clarity, friends? That's all. Very, very simple and easy question. But just present properly in the exam so that you get full scores. Just like that, don't throw the answer and come outside. Present very properly, very neatly. Then, see bit, come on. Miss Nitya has following balances in cash ledger. I hope we all know that when it is cash ledger, we will use only for that particular purpose. We can't use it for any other purpose. Her tax liability for February for CGST, SGST was 75,000 each. She failed to pay the tax and contacted US legal advisor on 12th April to advise her as to how much amount of tax or interest she is required to pay, if any, by utilizing the available balance to the maximum extent possible. She wants to pay on 20th April. So when it's February tax, we should clearly, logically pay by 20th of March. For February, my dear friends, for February, obviously the due date is 20th March. But she wants to pay when? She wants to pay on 20th April. She wants to pay on 20th April. So obviously, interest will come at the rate of 18% per annum. And what is the figure, by the way? 75,000 into 18% into 20th March, right? So interest will start from 21st March. So March 11 days, April 20 days. So it becomes 31 days divided by 365. 75,000 into 18% into 31 divided by 365. It comes to 1,146.57. So I'll take it as 1,146.57. So I'll take it as 1147. There is an interest under CGST also, SGST also. Getting clarity, friends? Come on. Now what is payable, my dear friends? What is payable is only CGST, SGST. What is payable is, come on, that too, under CGST, SGST, I'll take columns as tax, interest. Here also tax, interest. What is payable, guys? 75,000. 75,000 is the tax part. What was the interest component? 1147. Interest component was 1147. Come on. Interest component is very clearly 1147, my dear friends. Come on, see that. 75,000 is the tax component. Interest component is 1147. From this, I will reduce balance in cash ledger. And as I told you very clearly, my dear friends, cash ledger balance we can use only for that particular purpose. Otherwise, CGST we have to use only for CGST, SGST only for SGST, IGST only for IGST. That too, one minor head cannot be used for another minor head. That means tax balance we have to use only for tax, interest balance only for interest, penalty balance only for penalty. So what is the figure? 40,000, 1,000, 80,000, 400. So tax figure is 40,000 and 1,000. And this is 80,000, last one 400. So therefore, my net liability will become here 35,000, here 147, here nil, here 1147 minus 400, that comes to 747. That's it. That becomes my liability. Straight, simple question. If this kind of question comes, you have to jump in joy and solve, my dear friends. Jump in joy means don't dance in the examination hall, but it's very simple and easy question. Makes sense, right? Done. Going back to the paper. Debit. In an order issued to SC Limited, adjudicating authority confirmed a duty demand of 50 lakhs and imposed a penalty equal to penalty under 114A of Customs Act. Sir, this question also I will not discuss, my dear friends, because this question is talking about something called appeal in customs. In customs syllabus, we had once upon a time one chapter called appeals and revision, and that chapter has been removed from syllabus. So this is no more relevant for us. As I clearly told you, topics like advance ruling, settlement commission, warehousing, appeals and revision, all this have been removed from syllabus. They made our life more simple and easy now. Getting clarity, guys? Done. That is the end of story for question number 5, my dear friends. Come on, friends, we are done with question number 5. And finally, the last question of this paper, question number 6, my dear friends. Come on, see that. Briefly explain the procedure to be followed by authority for advance ruling on receipt of application for advance ruling under section 98. An interesting theory question. Whenever we make application for advance ruling, they will definitely give an opportunity of being heard before passing the ruling. And generally, they give a ruling within 90 days. An interesting point to be noted is that advance ruling authority will not allow the application in 2 cases. 1, the question raised in the application, I repeat one more time, question raised in the application is already pending, or second case, question raised in the application is already decided. I repeat one more time, friends. Come on, friends, what did I say? Question raised in the application is already pending, or question raised in the application is already decided. So in those 2 cases, my dear friends, advance ruling authority will reject the application, my dear friends. And if they don't reject, then they'll definitely call the applicant, give an opportunity of being heard, and after that only they'll give a ruling within 90 days. And after that, copy of the ruling will be sent to the applicant and also to the concerned officer. Clear, friends? Done. Pretty simple. Write properly, you'll get your marks. Then, what are the duties of National Anti-Profiteering Authority? This is dealt by section 171. What is their duty, my dear friends? Come on. Obviously, what is their duty is that to check whether reduction in rate has been passed to consumers. That is one major activity what they will do, to check whether reduction in rate has been passed to consumers or not. Then to identify those who has not passed, what, my dear friends, who has not passed. I repeat one more time, to identify those, what, my dear friends, who has not passed. Come on, friends, first line, what I told, sir? To check whether reduction in rate has been passed on to what, my dear friends? Consumer. Second, to identify those who are not passed. Then they can also do something called imposition of penalty. And one more crazy point they'll do is, my dear friends, let me tell you, they have got power for cancellation of registration. That also they can do, my dear friends. These are the various powers who has having, my dear friends? National Anti-Profiting Authority has got. And of course, they also got power to order reduction in price. They can order what, my dear friends? Reduction in price. That power also is there with them. Clear, my dear friends? Speak out, sir. Exactly. These are the duties of National Anti-Profiting Authority, my dear friends. Next point, CBIT. Explain the difference between what, my dear friends? Audit by tax authorities under section 65 and special audit under section 66. Friends, let me tell you very clearly, when we talk about section 65 department audits, generally what they do is that at least 15 days prior to conduct of audit, they will give a notice. Commissioner or any other officer authorized or empowered by the commissioner has got a right to do special audit, and they can do for whole year or for a part of the year, and generally they complete the audit within 3 months, further extended by 6 months, my dear friends. And when it comes to special audit is being done at any stage of inquiry or investigation. Any officer not below the rank of assistant commissioner can order for special audit with prior approval of commissioner by a chartered accountant or a cost accountant nominated by commissioner. So commissioner will nominate a chartered accountant or cost accountant, and that chartered accountant or cost accountant will conduct the special audit, and they'll give a report within 90 days. And the set period of 90 days can be further extended for another maximum 90 days. That's it. Getting clarity, guys? Done. Finally, the last question, my dear friends. See now, in January 18, Rock and Rock Limited imported a consignment from USA by sea. Value of consignment is 7.5 lakhs and duty payable was 1,50,000. Very good. Company filed bill of entry for home consumption, but before inspection and clearance for home consumption, it was found that goods were damaged. Friends, let me tell you, if the goods are damaged, we can ask for abatement of duty under one section called section 22 of customs law. On filing representation to the customs department, proper officer refuses the claim for abatement because goods were already unloaded. So what? Abatement of duty is granted when the goods are damaged at any time before clearance for home consumption. Proper officer is in agreement with the claim that the value of the goods has come down to only 1,50,000. Examine the issue with reference to statutory provision and calculate duty payable. What duty I will pay is only, I will check the value after damage and pay proportionate duty. Earlier the value was how much? 7,50,000. For 7,50,000, the duty was 1,50,000. Now for 1,50,000, what will be the duty? So what duty I will pay is only 1,50,000 into 1.5 lakhs divided by 7.5 lakhs. It comes to 1/5. So it comes to 30,000. This is only the duty what I will pay. Clear, friends? Because whenever we talk about if any goods are damaged, one more time I repeat, my dear friends, if any goods are damaged after unloading but before clearance for home consumption or any case, my dear friends, definitely abatement of duty is granted. Clear, my dear friends? Speak out. And abatement of duty is granted, and what duty will pay is, we will pay duty proportionate to the value of the goods after damage. Next slide. Would your answer be different in the above case if the goods get deteriorated after unloading and examination but before clearance for home consumption? Sir, let me tell you, in case of deterioration, no abatement of duty, guys. Because abatement of duty is granted only for damaged but not for deterioration. Of course, if the deterioration is before unloading, the story is different. But after unloading, only damage is covered but not deterioration. Clear, friends? Speak out. Done. And an interesting point always you have to keep in mind is that whenever we talk about abatement of duty, we always have to show the damage to the satisfaction of Assistant or Deputy Commissioner of Customs. Then only they grant abatement of duty. That's it. That is the story of point number D, and that's the story of question number 6, and that's the story of this paper of November 2018. Very interesting, wonderful paper which came in the exam. Are we fully clear, my dear friends? Done. That's the story of November 2018, my dear friends. Clear? Done. Shivateja signing off, and come back again with the paper of May 2018. Thank you so very much. Take care. Bye-bye.
If you like this video, share it with your friends. Subscribe to our YouTube channel to watch more such videos and learn from our expert faculty members. Press the bell icon to get regular notifications whenever we upload a new video. Download NDI mobile app to get complete CA course online. We value your support. Thank you for watching.